Welcome back to the Daily Journal. So we are looking at gold futures. Nasdaq's price action has been pretty choppy while we wait for Nvidia's earnings to come out later today. So I expect price action on Nasdaq to clean up after those earnings have been released. But in the time being, let's keep our tools sharp by doing some testing on gold. So starting on the daily, we can see after making all-time highs, we formed the swing point on the daily after taking out the previous week high. After that, we then had a change in the state of delivery as low as this. You could even use this candle over here, since this was the swing point that delivered that sweep and that swing point. Nonetheless, since that we have closed beneath this swing point over here, I'm using this as my dealing range. In addition to that, silver, its correlated pair, went and swept the previous month high, which is the all-time high. So, relatively speaking, gold is weaker. And it's this day that we're looking for the reversal. So let's rewind the clock. It's this 6 a.m. candle that we're going to trade, and we're trading the anticipation of a reversal. So we'll drop down to the 15-minute chart. So going into the session, which is 6 a.m., this is exactly what you want to see, a range. So once we open, take out buy-side liquidity, and then get a change in the state of delivery, that, to me, is a smart money reversal, given the fact that we not only have swept the previous candle high, but we've also swept the previous month high on the correlated pair, on the higher time frame. And if you look at the lower time frame, there's SMT as well. But we haven't yet had the change in state of delivery yet. So let's open up this next candle by playing it forward and see what price action we get. Remember, we need this previous candle high to be swept before we can start looking for a change in state of delivery to confirm a smart money reversal. Great. So now that price is traded into these highs, we can start looking for a change in state of delivery, which I'm going to use this candle here. Reason being is that this is the swing low that delivered the swing high that created the sweep. So it's this range that I want to see inverted. Once it does, my targets are the low-hanging fruit here, which is the Asia relative lows. Now, whenever I'm trading, I'm always looking to trade a market maker model. So once we get confirmation here, that's a smart money reversal, which confirms a shift from accumulation to distribution. So with the market maker model, the market makers are accumulating short positions on the way up since the market is going up, right? The market's bidding. Who's on the opposite side of the trade? It's the market makers. So for them to manage their liquidity, they have to have efficient delivery, which is to say once they accumulate shorts, they need to then distribute those shorts, because as the market sells off, again, they're the counterparty. And so as the market sells off, they are the counterparty buying those sells. So let's see if we get our change in state of delivery. Okay, and there it is. So at this point where we can enter at the open of the next candle. And since price kind of chopped around a bit here, those are nice little relative equal lows as well, which just gives you confidence. So the thing is, we haven't had any sweeps of liquidity here, so I'll have to be using that as my stop loss. Now, given the fact that this is a smart money reversal, we can project the full extension of this with the standard deviation. So 2 standard deviation is the minimum for me, and or my drawn liquidity. But since we've just got inefficiencies beneath this massive expansion, this huge displacements, very happy to hold my trade beyond the Asia lows. Also bearing in mind, I'm looking for distribution in the following candle on the 4-hour chart. So just as with a market maker on the lower time frame is accumulation, manipulation, and then distribution, you can also see that same AMD on the higher time frame, which is the power of 3, accumulation, manipulation, and then distribution. So let's see what price does going into the open of the third candle in the power of 3. Great, so now we're going into the New York Open, and price has just expanded lower, but it hasn't yet taken out any of the sell-side liquidity. Yes, it's taken out this liquidity over here, but with market maker models, you expect at the very least the relative highs or lows from the original consolidation. This is also time-based liquidity, with it being the Asian range lows. So if we are going to get a reversal from this point in the New York session, it would be from the Asia lows, in addition to these fair value gaps. But since we haven't yet taken that out, we could expect either a retracement or consolidation, then a sweep, and then continuation. So let's see how it plays out. Right, so that's the start of the candle of the 4-hour chart. You can see it open there. And let me just move out the way a bit so we can read price action a little better. Okay, so right now we're inside of a fair value gap. But since this has expanded from all the way down, at this point all the way down, we can look at 50% of this range to be respected. Great. So let's have a look now, because if I were to have missed that reversal in the previous candle, I could look to trade the continuation. And I'll need to see a close beneath this point, which is the swing low that delivered the swing high. And yes, it closed above this fair value gap. But let's look at silver. So there's SMT, right? Silver has not swept that high, whereas gold has. So there's a crack in the correlation. So if we do get a change of the state of delivery from this point, which is also lines up with the opening level of the 10 a.m. candle, which is some really great confluence, I expect this high to be protected. We can use that as our swing points as invalidation for our continuation trade. So what we're waiting for is that, right, a close below. Now you would have entered on the next candle, and your stop loss, because silver has swept that high, there's SMT. So technically speaking, these candles are actually safe, these highs. And then you can trade down to 2 standard deviation, but I need at least 2 ARB. And with there being a lot of swing lows down here, you could hold to 3 to 3.5, but there's really no need to when you've had this kind of move, right? You've expanded, you've just consolidated for a bit, you've swept the highs with silver, and then you've expanded for the New York AM session. Now we're going into the start of the PM session and the opening of the next candle, but our power of 3 on the high time frame is incomplete. We could get a continuation of the next candle. I don't trade the New York PM session, but since this trade will be open from here, or if I caught the continuation, quite frankly, that's enough. So if I hadn't got my targets and we're going into the open of the next candle, I would have actually just closed that trade. So there it is. So since we were looking at the daily chart, this is now forms a reversal candle, and we can look to trade the continuation on the next day, which I'll do in the next video. See you guys there. Cheers.